I'm Chip Rogers, and welcome to the AAHOA Educational Experience. We are talking about distribution channel analysis, a guide for hotels. This is a book that has been written by my two guests. I want to introduce to you Cindy Esisgreen with Calibre Labs. Thank you for being with us. And Mark Lamano, former president and CEO of Smith Travel Research, and now with New Brand Analytics. And I'm going to hold you guys out as the experts. And so, as people watch the show, you'll know what I'm talking about. In previous shows, we started talking about how does business come to a hotel, what are the distribution channels in which a customer finds their way into your door. And we're somewhere between 40 and 50% of the people that show up nationwide do so because they've gone through some sort of electronic format, right? But as we know, the electronic format from the perspective of the hotel owner is a lot more expensive than if someone just drives by and happens to see the hotel, or some of the more traditional manners in which, or traditional channels in which guests arrived at your front door. So this distribution cost and how you massage this in a highly competitive industry is critical to making money, isn't it?
Yes. So what happens is you've got costs for every way that business comes into you. So because the other costs have gone up too. I mean, it's not like your labor costs or energy costs, they're all going up as well. But as distribution channels add cost to the profit and loss statement of a hotel, you need to be able to figure out ways to control that cost. And if you can change the mix of business that you get and bring in more business through the more profitable channels, it can directly affect your bottom line in a positive way. And there won't be many other ways to manage some of your other costs. I mean, how much can you cut back on labor? How much can you cut back on other operating expenses? Your channel costs, on the other hand, you can manage by choosing different mixes of business and trying to tap certain channels that will bring you higher profit business.
But if we know, Mark, that the going through the OTCs is a very expensive distribution channel, but you're almost, in a way, you're almost addicted to it. Yep. How do you get away from that?
Well, it's not the easiest thing in the world, because one of the interesting things that plays a part of this is for the individual hoteliers, the guys that are actually running the property and making the pricing decisions on a day-to-day basis. One of the few people that actually come to visit them on a regular basis are the market managers for some of the OTCs. They come in there on a regular basis, multiple times a year, explaining to them the benefits. And most of the message they receive tends to be through those kinds of channels. The hotel companies tend to communicate more through electronic channels, send them emails, memos, this is what we want to do. But literally then somebody comes from one of the OTCs, sits across from them and explains to them why you should do this and why you're going to lose business if you don't book on our site. So yeah, they're used to using it. They know a percentage of the rooms are coming through there. But we had talked about earlier that about 10 to 11% of the rooms are booked through the OTCs. But whenever you go to a meeting, an AAHOA meeting or an industry meeting, it's about 90% of the conversation. And so it ends up driving this whole conversation. So yeah, people want to get out of it, but it's you have to be very disciplined. And like Cindy mentioned earlier in a previous show, that you really have to understand your customer and how they book and really manage that process. It's hard work. It's not an easy job.
And this is really, this channel, which costs 10 to 12%, I would think, going through the OTC.
More than that?
No, it'll be more like 25 to 50%.
So it's a very expensive channel, and it is one that has emerged over the last 10 years. And so now you have this cost, and again, as you indicated, labor costs are going up. If you're serving food, certainly food costs are going up. Everything associated with your business basically is going up. Yet the reality is that room rates are not rising at the same rate of inflation. That is, revenue is not going up, but costs are. That's not a real good recipe.
Right. So this is true, and in the book we did an analysis looking at the patterns of demand and the rate patterns, and we adjusted for inflation, and the rates have only exceeded the rate of inflation in 2 years in the last 12.
Yep, that's correct.
So. But the expenses have continued to go up. So when you start thinking about which expenses you can control, you need to really pay attention and see if there's a way to harness these distribution costs. Now, the OTCs are certainly something that has emerged in the last 10 years, but there are many new channels of distribution that are emerging now and will come in the next 2 to 3 years that can provide some opportunities to hotel owners to try to bring in more business through other channels that are very popular with consumers. So like Google has started a new search engine just for hotel bookings.
And we're going to, in the last segment, we're going to talk about what's next or what is in the future. But and because this thing is changing so fast, I mean, OTCs weren't really around. I mean, they emerged after 2001.
Yep.
And they have grown ever since. But we can't anticipate they're going to be here forever. But is that cost, I mean, you put that cost into the mix along with rising labor costs and room rates not really increasing above the rate of inflation. That means, without a doubt, margins are coming down unless occupancy rates are going through the roof, and they're not, are they?
No, occupancy rates aren't going through the roof. I mean, after 2008, the fourth quarter of 2008, when there was the economic meltdown, occupancy rates declined, fairly substantially, but still they're in the high 50s, low 60s nationally. But to your point, during that period of time, the industry tried to make up for those declining occupancies by cutting expenses where they could. So now you have an industry that's basically already cut their expense part of the equation to the bone. I mean, there's really not a lot of stuff left you can do as a hotel operator that you haven't already done because of the distressing economic times. And now you're starting to book room through a more expensive channel. You're just driving your rates down a little bit. The rate of inflation keeps progressing. It's not huge, but it's higher than you can raise your room rates. To give you an example, room rates in 2008 nationally were about $108. They declined, to about $100, and now they're only back to $106 at the end of 2011. But it's our estimate that when you factor in the increase of cost in doing business, basically the inflation rate, it's going to be about 2015 or 2016 for the industries able to actually charge the consumers on an inflation-adjusted basis the same as they did in 2008. Like you mentioned, that's a recipe for distress for the owner.
And one thing we'd mentioned in our last show are the term flash sales, which I guess if you're an owner and you see you got empty rooms, I mean, it's got to be very enticing. But Cindy, I think you would agree with me that if this continues, it's only going to damage everybody, right? Explain what a flash sale is.
So flash sales are things like a Groupon or Jet Setter or Living Social kind of offer. So the model that they have for that generally is you give a 50% of your room rate, and then the remaining 50% that's sold to the consumer may be split between the vendor and the hotel. So you may end up only getting 25% of what your rate would normally be for that time. And the concept is based on the idea that you'll get new customers that you might not have gotten and that they would come back later. But going back to your cost question, when you think about analyzing costs and you try to apply your operating expenses against every room and you say, every room has to stand for itself, whether it comes in through a flash sale, comes in through an OTC, comes in walking through the door because somebody drove by. Everyone has to bear its fair share of the operating costs. When you run those numbers, as Mark had mentioned in an earlier show, some of the channels actually do not yield any profit, any contribution, which means that your higher profit channels are subsidizing some of the lower cost channels, and you end up, why should you bother taking that business if all you're doing is subsidizing it by having to take in business through a channel that is more profitable? So if you look at each channel of business, whether it's flash sale or OTC or GDS or any of them, and you think, how much are my operating expenses, and can every room night stand for itself and cover its fair share of expenses? And if you can say yes at the end of that, including any ancillary revenue that you may get from that room night, then it's worth taking it. But if it can't even hold up and pay the expenses associated with that room, then you have to wonder if it's really worth it or not.
And I guess from a hotel owner's perspective, I mean, it's almost like a gamble. They're like, well, I can sell a few at a loss because I know I'm going to make it up on the other side by selling these over here for profit. But eventually, I mean, first of all, that's very risky. But you can definitely get caught on the wrong side of that balance sheet. You
can, because what you're doing is you're gambling about loyalty. You're basically saying, if I do this, that guest will come back to me because they've had a good experience. I'll get them in the hotel, they'll have a great experience. We'll take care of them, they'll do it for a price that's reasonable, and then they'll want to come back and stay with me. The only flaw in that logic, it's great logic if you were the only person doing that. but everybody's doing that. So I'm not sure what the real advantage is. And so if they're going to choose you because you're the lowest price, they're probably somebody's going to go ahead and do that again.
Well, so they may be loyal to the discount, not loyal to you.
Right.
So they're just going to look for the next deal, and they don't really care where it comes from.
Right.
And for that kind of customer, you're not going to get them back because it's the next deal. Whoever's offering it is going to get them, and they'll just keep moving on to the next deal.
We've got to take a quick time out. We've got a lot more to discuss in the second half of the show. My guest again, Mark Lamano from New Brand Analytics. Thank you for being with us. And Cindy Estes Green from Calibre Labs. We'll be back right after this. Welcome back to the AAHOA Educational Experience. I'm Chip Rogers, and again, my guest this week, Cindy Estes Green with Calibre Labs. Thank you for being with us, Cindy. And Mark Lamano with New Brand Analytics. In this final segment, we have talked a lot about channel distribution and what I would term as blends of those channels, and what you term in the book as optimal channel mix. So what does optimal channel mix mean? And I'm sure that whatever that is, it differs from hotel to hotel and what kind of market you're playing in.
Right, so each hotel has an optimal channel mix. So some hotels would like to think that they can do as well as the market leader in their competitive set. But really it's about what your hotel can do given the number of rooms you have, the condition that your property is in, who you're competing against, and the nature of demand in that market. So you have to be kind of realistic about it. I mean, taking a note from Thoreau, who says, know thyself. You have to really know your property and what your property...
First time we've ever had Thoreau on the show, I want to point that out. Go ahead.
If you really know what your property is capable of doing and what's going on given the constraints of your marketplace, then you can look at each of the channels and say what can I really go for in any given month or any given quarter or even over the course of a year. And it's very helpful to do that as a target because it will help you make decisions about where to spend your media dollars, where to spend marketing dollars, how much inventory you should give to the OTCs, whether or not you should do flash sales. All of these kind of questions can be driven off your optimal channel mix and your target and how much you want to get from every one of those channels over the course of the upcoming time period.
And just to highlight why optimal channel mix is so important, if we were sitting here in August of 2001, before September of 2001, we wouldn't even be talking about OTCs. But now we must, at least as a hotel owner, plan for the future of whether it's an OTC or not, the electronic reservations. And that channel is going to continue to grow, correct?
Yeah, that is correct. Like we mentioned in an earlier show, we estimate that in the next couple of years, about 50% of all bookings, more than that, will travel through some sort of internet-based application, some sort of website, an OTC, a Google, a Facebook, brand.com. It'll absolutely be trending in that direction. There'll be more and more ways as the younger generation comes up and they're more involved in the travel and hotel business, and the people who are used to the old channels calling on the phone and doing all that kind of start to drift out of the marketplace. That will be a natural acceleration of that. That will also be commingled with people using smartphones and non-desktop kind of applications to make the bookings. The whole mobile thing is going to also revolutionize it. There's all kinds of apps, everything will be happening on that. And I know Cindy wants to talk a little bit about that because it's one of her favorite things. So I'm going to actually let her go because...
Well, I mean, two things to talk about because I think it's really important. Before we get into mobile and all of the future, the big giant out there that all the names you see on television have been worried about entering the marketplace apparently is now entering the marketplace, and that is Google. And when you have the amount of traffic online that they have, and then they say, hey, now we want to get into selling hotel rooms, that scares the daylights out of everybody else, right?
Right, but they're not going to actually be selling hotel rooms. They're going to be a referral site, and that's going to be the new growth area is referral sites, and they won't, like anything else, be free either. So there will be a cost for all these referral engines. So the big three are search, social, and mobile. So as Mark mentioned, there's a big growth in mobile, but search is growing because as soon as Google announced that they were going to get into hotel and flight search specifically, everyone started paying attention. And in order to use Google, a hotel will have to pay it's like a commission. It's a percentage of the stay value for any business that's referred to the hotel through the Google Hotel Finder. But there's other search engines that will be coming, and they will also have some kind of referral fee.
But will this distribution channel, I mean, when I think about Google and what they have the ability to do, but it could be massive. But will this distribution channel be cheaper than an OTC?
Well, the real question is not, so yes, it will be cheaper, but there'll be more points of contact that the consumer makes. So they may come in through Google, and then they might go to a travel inspiration site to get more information. And then they might go to a social site to just hear what their friends say about the hotel or the destination. And then they finally may go back and actually make the booking. There may be 10 or even 15 points of contact in between the initial Google search and the time when they make their booking. Half a dozen or 10 of those points of contact may have a small cost associated with it. So what we predicted in the book is that upwards of half the business will cut through one of those kind of intermediaries, will have some point of contact, and there'll be small charges along the way. And the cost may be less than what you're paying through the OTC, but it's going to be on a broader percentage of the business.
One thing we haven't talked about, and we've got just a few minutes left, but it's something that it seems like a lot of people are beginning to use, and that is these sites like Travel Advisor. What type of impact does that have on the industry? Because in the past, you know the names, but you don't really know, is that a good hotel or a bad hotel? What is the impact that these type of sites are having? Because I know when I look at hotels, I'll go and look and see whether people like that or not.
Yeah, and it's becoming a huge deal. I think the hotel industry for a long time tried to ignore that as something they really needed to pay attention to. But the reality of it is there's a whole group of consumers that are actually just looking through that. And I'm not so sure they're always looking at how many stars you get, but they're looking for what people are saying, what their experience was like. And one of the interesting things we found that there's I guess for lack of a better term, what we would call serial shoppers. And so they're going 10, 15, 20 sites like Cindy mentioned before they're actually booking, and they're looking and they're reading and they're verifying and they're gonna know what people say, and before long, those sites will start talking about the most dog-friendly hotels, the most ones with the greatest ambiance. There'll be all this kind of stuff. The best Valentine's Day hotels, and you're gonna have to be prepared as a hotel owner to react and understand what it is you believe your product to be. Like Cindy said, know thyself. But then what do people think about you? How do they perceive you? I think before, you could kind of operate in a little bit of a bubble, and not so much you wouldn't want to cover up a problem, but not everybody in the world might know that you had a problem. Now they're going to know if somebody has a problem. That's going to be a huge deal for hotel owners.
And it would seem to me too that, as people grow accustomed to purchasing literally everything online, it's not just the purchasing that happens online, it's all the research that goes into the purchasing that now happens online.
Absolutely. So these sites become referral sites. So it isn't just where the booking happens that matters. It's your presence and your role and the content that you have on all these other sites. So when someone asks me for advice on, what can we do about it or how can we influence it, you are present in so many sites, and shoppers are going to all these sites, so that it's not where the booking happens again, because much of the bookings in the future will come direct to your booking engine, but it's all the stops they made along the way. And if you can make sure that the content that's there, which means your photographs, the words that are used to describe your property, if there's video, if there's opportunity to put video, anything like that, all will influence the ultimate outcome. So the one thing that a hotel owner really can do is to enrich that content and make it as good as possible. And to the point of consumer reviews, that's going to be another major referral engine, making sure that reviews are responded to. If there's negative comments, it's clear that management is involved and considering what's going on and concerned about what's going on. So being actively involved, because shoppers are seeing all of it, and it will affect their ultimate decision.
Yeah, staying on top of this from an online presence has got to be critical moving forward.
Yep. It's totally critical. the industry is at we believe kind of a tipping point. Is where they really have to understand that the world has changed very dramatically from where it was even a year or two ago. And hotel owners' ability to understand not what the world looks like right now, but what it's going to look like in a year or two, is really going to be critical to success. And the ones that understand that are going to be the first ones there, and they're the ones that are going to be the most profitable and be the most effective.
Well, we've got to finish on that. I want to thank both of you so much for being with us over the last 3 weeks. This has been extremely informational. Mark Lamano with New Brand Analytics, and of course Cindy Estes Green with Calibre Labs. Thank you again for joining us on the television show. I'm Chip Rogers, and if you'd like to contact me, you can do so via email, chip@ahoa.com, chip@ahoa.com. Thanks again for watching, and we'll see you again next week.